You're listening to Tech Suite for the C-Suite, where we bridge the gap between technology and executives.
I'll share the video.
Awesome. Awesome. Thank you so much for coming on, Alex. Awesome to have you. I've seen you a lot around Farcaster, like basically the guy to go to for startup in Texas. Also saw you offering that service through Bountycaster, which is really interesting, and I'm sure we'll dive into that. First of all, how are you?
Doing well. It's the start of busy season, so the team and I are on firing away on doing taxes.
That's awesome. Lot of taxes going on early this year. You said, well, in the US, it's basically you have to file today, or some in April.
There is a filing deadline today, January 31st, and there is basically a deadline every 15 days until about April 15th.
Awesome. So what do you exactly do? Like, feel free to introduce yourself.
Sure thing. Great to thank you for having me on, Samuel. Personally, approaching 20 years of tax accounting and finance experience. Um, Physically located in New York City. A lot of our clients are across the nation in the US, as well as a couple outside of the US as well. We work predominantly within the startup community, both on the individual and business side. So for individuals, we'll do tax plan, tax strategy, as well as tax compliance. A lot of equity compensation, so RSUs, ISOs, NSOs, planning, 83B, QSBS planning. And then also on the business side, we'll do taxes, bookkeeping, FP&A, external CFO, R&D, basically a one-stop shop to help make sure that everybody within the tech community is possible for them to be taken care of. And then for companies that are outside, whether they are a US company with a subsidiary outside of the US to employ people, or if they are a foreign entity with a Delaware C Corp in the US in order to bring in investors, whatever their structure is, we're able to help support them from a US centric view, as well as making sure that some of the US to international is taken care of. Um, and then so that there's no surprises as much as possible. And then we'll work with their local accountants to make sure that whatever reporting is necessary here in the US, it's fully taken care of.
That's really interesting because like I'm actually sitting at ETH Zurich where we have a big co-working space where a lot of startups apply to Y Combinator, and one of their mandates is that you have to either be in the Cayman Islands or in the US for their investment and reporting reasons, I assume. So a lot of people here when they apply, they're like, do I have to go to the US? Do I have to set a company there and all that? And that's one example where they were able to take a Swiss company and go through YC, but it only worked because probably of guys like you helping out, because they already had signed a contract for a grant before that they have to be located in Switzerland. So YC, and then they worked around it probably by creating a company mantle.
Yeah, and we've done quite a few incorporations for foreign founders where even if you don't have a social security number or you're not physically in the US, we're able to help get you your EIN. We're able to help you get your bank accounts, mailing address, and all of that so that you can operate the company legally and appropriately, and then not to have any surprises in a year or two.
How does that actually work with technology nowadays? Like, I'm always surprised with the legal and accounting side. It is technically so clear, but then the structure is so laid out in a way that you have to know all the different paragraphs. While somebody like you would be, oh, that case easily doable, that other case not doable. But if you just try to figure that out, it's really hard. While with technology like stablecoins and so on, you can move money in seconds all over the world. While with banks and so on, that's impossible. Like, how does that actually impact your experience so far?
Um, so the perfect example of this would still be that the preferred form of communications with the IRS is either physical mail a fax machine or a phone call.
But the IRS is the tax office in the US, right?
Correct. It's the main tax authority on a federal level within the US. They will not accept an email. They will not accept any form of digital communication. If you send them a FedEx or a UPS or DHL or whatever post, they very well might not even accept it because the address that they want those physical mail sent to is completely different than the ones that they have publicly listed because that's only for USPS mail. So it's those quirks and limitations and delays that you need to factor in and be aware of when dealing with specifically at least the US tax authorities. Some of the other international tax authorities that we've interacted with are a little bit more advanced. They'll accept online submissions, they'll accept things electronically. So it really does vary country by country.
In Zug, Switzerland, you can actually pay your taxes with Litecoin, Bitcoin, and Ethereum, and you can already do that for like at least 5 years nowadays. So they're already advanced in that sense. A lot of that is there. Even in Germany, while we Germans tout ourselves as like the slowest country out of them all, by basically we just screw and hinder ourselves. But the tax office itself, they also accept mail, and they have a digital portal contracted out to another company. So I'm like, what are you guys even doing with my data and tax filing? But they have that.
Yeah, it's always interesting to see and compare between how different countries operate and potentially how many limitations or friction points you might have with the IRS.
How many like of those friction points are solved by technology or could be, where you're like, it doesn't really make sense at all that they still keep doing it this way?
I think it's a question of proper funding of the IRS in order for them to create systems and operations to be able to accept more things in a more digital fashion. They are finally starting to work in that direction, in having more online portal access, being able to do more things online without it having to be a physical signature on a form that is then faxed over to them. So I think it's going to take a number of years and the appropriate individuals at the helm of the IRS in order for it to happen.
That's interesting. So it sounds like more of a political problem than actually a technical problem.
I think it's a funding concern or limitations of funding to the IRS.
Well, to hit on what Jacob asked when I went around on Farcaster asking for questions, why does he pay taxes if he can't file it digitally? And
Well,
that's a funding issue.
well, we file all taxes through e-filing as we're required to for all of our clients. So it is technically being transmitted digitally, but taxes go through a lot more than just paying your tax bill. There's a lot of things that get paid with our tax bills. The fact that it's done potentially not in the most efficient way is a whole different question.
Uh, so basically, Jacob, you have to pay taxes, just pay them.
Correct. Correct.
That's awesome. How did you actually get into the whole like crypto ecosystem? I would assume it's from the technical background and the companies you work with, or is that like how did you get into it?
So back in 2018, I had worked with Gift Crypto, the nonprofit on Coinbase, and helped support them through a couple of things that they were looking to do within the crypto space with the IRS, and getting the appropriate nonprofit classifications and whatnot. And then as people were leaving Coinbase to work on new projects, or if they just were simply looking for a individual personal taxes within the crypto space, our name was being passed around within Coinbase, and that's how we just slowly grew and expanded within our client base, and then the clients continued referring us out to other people and we just continue to grow.
Well, being passed around in Coinbase 2018 and onwards must be like when they just hit their stride of being like, okay, this is like really going to work, and people started like, oh, I actually don't want to be corporate. So while Coinbase grew, some of the people probably were like, oh, I just want to found something on my own, and I probably also have personal taxes. Is that how it then went into you also supporting like crypto startups and having to go into all that?
Yeah, it was a very wide mix of things, whether people were leaving to start their own blockchains or something else within the crypto space, or some people were simply like, "Hey, I'm trading crypto securities in my everyday life. I need to figure out how to properly file this." And then we had a couple of people who got the initial 10,000 letters from the IRS asking for more information and details about the audit for crypto taxes personally. So we were able to help and support on that, and we just continued to grow within that community.
What's the most surprising thing you encountered during that?
This most surprising thing, it's how many early people would run business transactions and activity through their personal crypto wallets, which triggered a lot of audits. And we ended up supporting, like, they were not clients of ours prior to being audited.
Yep.
And then they became our clients because they got an audit notice, and then they would come to us and ask us for help through the audit support. We had one individual who had like a $12.5 million tax bill from the IRS proposed because they just ran a lot of business transactions through their personal crypto wallet. And when we showed the IRS, like, hey, this is actually not business, this is personal. This was very early on. Nobody really knew. They didn't have the appropriate advice, so on and so forth. We were able to get it resolved for like $15,000 because they found some other issues on the personal side that was never reported to the IRS. And basically the client was like, hey, this thing went from 12.5 million to 15 grand. I don't want to fight this any further. Let's just get this done and paid. And we were like, hey, we could probably get the 15,000 even knocked down even further. And they were like, I just don't care. Just let's get this thing over and done with. I don't want to deal with this anymore. So I think the biggest one is how much people mix personal and business. It has to be one of the biggest ones.
Well, that is an interesting one, because people always talk about on like crypto forums and cycles platforms, Twitter, all podcasts, all that. They talk about, well, you have to have separate wallets for everything that you do, but the convenience is I'm just going to use the one that I have.
Correct.
Even for me, it's interesting because when I'm developing stuff, for customer deployments, we always create a new wallet for each deployment, because if one seed phrase got out, that would basically have us compromise every single deployment we do. So we do a new one, and then we just store that safely. And after the project is done, we just transfer over the smart contract ownership to the customer, which in non-technical terms means they just get administrator right and we revoke ours. So we don't have anything to do. And if that wallet is then compromised, whatever, we don't care. That transaction during that process, we just then send over to the accountants and bookkeeping and have it manually. Though that one issue is just gas fees are never even in the conversation. In Europe, with new regulation and the German tax officials having I think it was like 2022 paper out on their initial thoughts on crypto taxes, especially focused on coins. What they did is they said, well, any fees you incur are treated like bank fees, so like trading fees and all that. Though it that doesn't mean that a smart contract deployment, when you have fees for the technical development, is a business expense and all that. So I haven't had questions back yet, but I'm well prepared to get questions and be like, what is this? Because I don't have an invoice from Ethereum saying, oh, you deployed the contract to Mainnet, or you bought your ENS for $1,000. What's this?
Yeah, it really becomes a question of how much support or like how much documentation is required in order for you to be able to take that deduction. And I guess partially because we are so early in all of this, there haven't been that many audits and there haven't been that many court cases to be able to say, well, based on this court case or this legislation, I'm able to do X, Y, Z. The legislation and court cases are probably going to happen in the coming 3 to 5 years. So we'll see where it goes and how well everybody's able to defend and support and go from there.
What's like the biggest challenge you face when you're like, oh, people are working in crypto, especially companies, and like think of an executive being like, oh yeah, we want to try something in crypto or actually be in crypto. Like what's the biggest thing they have to watch out for?
The biggest thing is actually fraud and having too much risk and exposure in a non-stable coin, ETH balances that are multi-million dollars. And it's revenue that they've generated in ETH, but their expenses are in dollar terms.
Yep.
So one of the biggest things that we always talk with them and try to push them to is convert some of the ETH into a stable coin. You don't have to take it off chain. You don't have to take it into the US dollars and US banking system, but you need to at least take some of your expenses and put it into a stable coin. Because, hey, if ETH is going up, and which everybody wants to happen, it's great. The value of your portfolio continues to go up while your overall expenses stay stable. But you also need to be worried about what if ETH goes from currently $2,400 to 2,000? How much does that reduce your runway? Does this potentially jeopardize the ability of your project to actually go live and be functional? So it's a continuous conversation that we have with founders as well as their teams of like, listen, I get that it's public that you're converting ETH into something else. But if you explain to people that like, hey, the next 6 months we have $2 million worth of expenses and we're taking $2.2 million of ETH, taking 1,000 ETH, converting it into USDC, I really don't think anybody's going to be angry with you or think that you're trying to take money out of the project and run with it. I'm like, especially if you put it into a public wallet that people can see, like, hey, here's the transactions and it's publicly available to see that it's monthly payments that are going out to contractors. It's really not going to get people angry. So that's been our biggest conversations lately, and we have a couple of those clients and a couple of those projects where they have very large ETH balances, and I'm like, you will sleep better and I will sleep better if you have, call it 6 months worth of expenses in USDC, and then you don't need to worry about the day-to-day fluctuations of ETH.
Does the fluctuation also impact not only the expenses but also the accounting?
Yeah, the fluctuations in valuation, whatever it's ETH, Bitcoin, or anything else, end up every single transaction. So it complicates the accounting, just the bookkeeping and accounting on a transaction by transaction basis. But there are tools that are slowly getting better and better that we're using to make things a little bit easier, but it's still things that need to be factored in.
because for me, one of the things in Germany, and I think that's also a wider Europe thing, every transaction that you do when you say you receive ETH at 2000, now it's 2400, and those $400, if you just take one ETH, are a taxable win. Um, so if for whatever reason we have a crazy day in Ethereum and it happens that there are 5 to 10% fluctuations, that means that I now have a taxable gain of $200 because I bought Coinbase ETH in the morning, sent it out to the deployer wallet for my contract that I want to deploy, and I didn't want to spend customer money just because gas was high and I waited a little bit. That waiting results in me having a $400 um, taxable profit that I now either have to find a way to deduct or just pay and add to the customer bill. And then you're explaining to them, well, yeah, we only spent 1,000 on your contract deployments overall, but you still have to pay us 1.5 because of all the taxes and fees and all that. It's an interesting thing for sure.
Yeah, there's definitely quite a bit of uh, reconciliation that's necessary between what Web3 believes should be the answer and what the government believes the answer is. Um, and it takes a bit of time and education from us to the clients of like, I totally understand where you're coming from and how you're viewing this, but this is how the government views it, and unfortunately, um, they're they're going to win
Yeah.
on this, and this is why they would win.
And so the government view likely is, well, you're holding a asset which you are technically trading, um, while the crypto view is probably, well, I'm holding a currency and US dollar is also not taxed if it loses against euro, Swiss franc, or whatever.
Correct. It goes back to the one ETH is one ETH, but in the eyes of the IRS, it's $2,000 versus $2,400, and so on and so forth.
Yeah, that's also a fun thing personally. As a developer, I'm lucky in that sense. But a friend of mine had around 400, 500 transactions in terms of NFT buying during that NFT bull run, just because he made like 50, 100, sometimes 1,000, and that added up. All these trades, he probably he lucked out in the way that he held one Bored Ape, which through all the stuff that the Bored Ape Yacht Club did, paid him enough. But that trading itself just cost a lot in accountant fees because the accountant was like, wait, how many trades have you done? Did you expect profit during those trades? And he was like, I just bought collectibles on the internet, right? An art collector doesn't have to necessarily declare a business. But the accountant was like, you are expecting a profit, which makes it a venture in terms of German law, and we can't even hide it because you have around 400 transactions.
Yeah, the other big item was that during the bull run, nobody was putting any money to the side for taxes. People were just taking all of their gains and just putting it back into the market. Um, and if you didn't exit certain losses or certain positions before December 31st, you what we've seen some people have is they'll have gains in one year and losses in the following year, and you
Mm,
can't offset it across years. And what ends up happening is that they don't have the liquidity, or they don't have enough liquidity because it's dropped in so much in value, in order to pay their tax bill. And that has caused a fair number of people issues and problems in order to make sure that their tax bills are appropriately paid. So all of those items are things that are complicated with crypto, a very young population being involved in crypto, and certain other items. We've also had a fair number of times where the parents or the adults did not know that their 15-year-old child is upstairs in their bedroom flipping NFTs for potentially a 7-figure win. And then all of a sudden, everything that their parents have done or planned to do with taxes is completely blown out the water, because potentially the child has made multiple times more money than the parents had made that year. And their accountants potentially are not ready to be able to do that reporting.
And then you have to do the reporting for the taxes for crypto for the wins, and you also have to have the liquidity, I assume, to pay that multi-million-dollar win. So if you then bought another security on in terms of equity or whatever, you may have a little bit of liquidity left because you did the conservative play and took it out of the volatile crypto world. But if you did the crypto thing, which most of the people do, because especially if you have those kind of wins, most think they can replicate it. You then go into other assets. You could have the drops like we had going from 2022 2023, and then you get into those kind of issues. What would be the thing you would do if you had just one? Because most of the things, it's if it's coins, they're liquid. But if it's NFT, it's especially interesting because if I only have one NFT, I either have to sell it, and then just not reinvest it, and that is an easy thing. But it could be like, oh, just keep a third of it on the side and convert into stables and think of that third always as a trading fee so you can accrue enough for taxes, and if you have something left over end of the year, you have new liquidity. Be happy. That's probably the smart play, I would assume, from what you have said. But if you just have one NFT and you still have to pay gains and you still have that one, like how does that work out? Like what do you do in that sense?
So there's in the US specifically, there's no tax on unrealized gains. So if you minted a Bored Ape at the initial launch for $50 and it went up to 500,000, there's no taxable gain until you sell that Bored Ape.
Yep.
So there's at least that help in not being pressed. But if what you're doing is just flipping NFTs continuously, so you bought it for 100, sold it for 1,000, bought another one for
Yep.
200, sold it for 1,000, which a lot of people were able to do. You need to make sure that you take some of your gains off the table, like you mentioned, into a stable coin so that you have the liquidity to pay the tax bill come April.
How does that work in terms of the stable? Because I can just easily go on chain, convert it into stable, be all good in a crypto native way. For companies, that's even more difficult because, especially big ones, they have reporting issues, while the small ones can just basically use the personal plans and just declare that as a business account. At least that's the easy way around it in Germany, especially if you're just self-employed and don't even have a legal entity. Um, Other than that, if you have a legal entity, most of the people I know, they use Coinbase's institutional offerings, but those are harder to get and qualify for if you're a small company, because no institution will treat you as an institution while legally you are. It's like, what's the big difference there?
And this exactly goes back to the prior point where we've got clients who are having issues because they're using personal Coinbase accounts or personal accounts to trade for business purposes, where the reporting is different between personal and business. So that's where you really need to go through appropriate channels in order to set up a dedicated account that is used exclusively for the business. Hopefully in the EIN and not your social security number, under the name of the business and not personally. There are ways to clean it up in the event that, like, hey, it's going to take us 4 to 6 months to get a Coinbase account. So for the 4 6 months, we used some light trading on my personal account. There's ways that you can report that on your personal tax return so that it doesn't trigger an audit, but it still requires having some reporting on the personal side as well as the appropriate reporting on the business side. And the biggest thing there is that you don't want to, for a very long time, continue trading on your personal account when it's for the business.
Yeah, because then what typically ends up happening is, at least in Germany, that the tax office is like, this is the amount of time, this is what you did, you can't deny it because here are the statements you send in. This is not a business, you didn't declare it, so either you have to pull back the business until that, or you have to do the personal reporting on that, take it out of the business. And especially at the beginning, it's really interesting because you have a lot of expenses in a business at the beginning, while typically you don't have a lot of revenue. For most stuff, some people, they just get a big contract and then file a business through that. Lucky if you're one of those people. But what ends up happening is you have your personal account expenses there and you can't offset them anymore, if that is the case where they say, oh yeah, this is just personal.
Yeah, exactly. It becomes a mismatch between income and expenses. And there's also limitations on how much in expenses you can take. Is it really a business at the personal side, and so on and so forth. So it creates a fair bit of complexity and headache if it's not done correctly.
So if you're a business, either starting out or already existing one that wants to enter the space and do something in crypto, like what is the first step that you have to do to actually be able to then enter into it?
So when there's the start of a inkling of a conversation about like, hey, we might do something within the Web3 crypto space, at that point, go and apply for a institutional account, whether it's Coinbase, Circle, or any other brokerages out there, because the time that it takes you to develop the product, go through the conversations internally, and figure out whether or not you're going to go live, that is roughly the amount of time that it's going to take for you to get the accounts open at the institutional level, which will hopefully avoid the issue between personal and business. So I think if it's possible to do that, start on setting up the account for the institutional level as early as possible, and then just basically go from there.
Is there a big difference between setting up that for a big, large corporation and a smaller one, like a startup?
It usually has to do with internal approvals and sign-offs as to like who's going to be managing that Coinbase account and so on and so forth. So a lot of it has to do with internal controls and policies.
Like from a tax standpoint, from an accounting standpoint, it's nobody really cares as long as the reporting is in line.
Correct, correct.
That's awesome. So it also means that a big corporation can just go and be like, I'll apply for that account, and we can just instantly go on chain.
Once the account's on live, yes.
Yeah. Otherwise, they'll have even more issues than the personal one, because as a person, it's like probably not that much money unless you already did your crypto trading or whatever a while back. While for the business, it could instantly run up. If you then go to a business that wants to enter Web3, like what are the big trade-offs in terms of positive and negative you see in general with blockchain, Web3, and crypto?
The negatives is that this is a very different process that companies are not used to. So it's a different process from a accounting perspective. It's a different process from a compliance perspective. It's a different process from a controls perspective. So what people are used to at large or mid-sized companies with having controls or getting statements and other traditional reporting, it just does not currently exist, or it currently doesn't happen within the Web3 space. Like your MetaMask or whatever wallet does not send you a monthly statement in the mail to show what your balance was and what your balance is. So like those are things that people are not used to. And then it also complicates things from if you're a publicly traded company, it complicates things for annual audits and making sure that the auditor is comfortable with the crypto reporting and activity. So there's a lot of ramifications around this, and like your control or access to an account isn't based off of a username and password. It's with seed phrases and other things. So like you need to make sure that you have the appropriate controls internally where things are stored. You can't simply reset the password. You can't just call somebody up and talk to an account manager to do something for you. You need to have the appropriate systems in place internally for things to function correctly.
Yeah, that's an interesting one because you can't reset your password, so if you lose it, you're screwed, is one of the biggest ones. While also that you can't undo anything. Well, typically in banking, especially if you're a large corporation, you call up your bank and they will find a way because it takes a couple days to really settle. If you're an end customer, don't try. If you're a big corporation, you have a shot. While in crypto, both don't try.
Correct, correct. Like sending a wire. It's like, hey, you sent the wire to the wrong uh, party or something happened while it's in transit, and you can call up your bank and be like, hey, this wire, this ACH, can you please kill it? And 9 out of 10 times they can actually do that. With crypto, once you hit send, even if it's to a burner wallet, it's gone. Whether it went to the wrong wallet or you transposed a number or whatever, or you sent it from one blockchain to another, which is not being supported, you can't you can't undo it. Once the transaction is done, it's done.
Yep, that is also the hardest thing for people to understand when we develop solutions for them, because they're like, um, if that goes wrong, we can just undo it, right? We can just issue a fix. I'm like, if you move money from your customers to somewhere else, you cannot undo that. If you just have a bug in your logic, we can just issue a new version and have the front end point there. If you want the upgradability and the ability to do those fixes, we have to talk about it now. Though that will add to the security complexity of everything you do. You'll have to explain it to the crypto natives that use your solution. Like the end consumer doesn't care. But the crypto natives, they will be like, why can you change the implementation? Like, what do you need it for? What's the controls on it? What's the checks? Because the whole idea of crypto is to actually have it in a way that it just works, kind of like the Apple philosophy where you can't do anything and it just works, hopefully, and if it doesn't, you're screwed. That is basically the whole in crypto, while the it just works is being figured out as we speak.
Correct, correct. It's basically we're building the plane while it's in flight.
Oh, that is a perfect description, especially with the speed of the planes. Like we're always trying to make the plane faster while it flies without screwing up the turbines.
Yep,
Uh, if you look at Ethereum as the example, like Bitcoin, I think is the one where they just throw a rock into a never-ending hole, and that rock is a rock. That's the philosophy of Bitcoin, but Ethereum is the we're launching not even a plane. We're trying to launch a rocket, but it is a plane right now, and we're trying to make it a rocket, like a space shuttle, where it looks like a plane and wants to be a rocket. So we're screwing parts in, we're taking parts out, we're adapting it to make sure it actually becomes a rocket and can hit like tens, hundreds, thousands of times more speed than it currently has in flight. So like why there are billions of transactions settled on there every day.
yep, yep. Never a dull moment.
No, it's also always interesting to follow the technical discussions around it because people then are like, so if you screw with the Ethereum how it works right now, what does it mean for backward compatibility? Um, so the going from proof of work to proof of stake, which is for those unfamiliar, the switch where Ethereum was like you don't need to put up huge amounts of computing power to confirm and secure the network. You now just need to put up a computer that verifies the rules and a financial stake instead of a energy computer hardware stake. Um, that was planned from the beginning, but even that transition meant changes in the way how contracts worked. So in the design, they had to leave some things in that were just there for the proof of work previous system, just because some smart contracts still need to function afterwards. So the block difficulty, which describes how hard it is to physically solve the problem to secure the chain, that is still in there. You can still use it because smart contracts back then used it as some sort of randomness. So that is actually changed and pointing to a new, more random thing in the new version, just for backward compatibility.
Yeah, it's definitely never a dull moment.
No, how do you actually stay on top of that? Like, do you follow the technical discussions, or are you more interested in the legal?
For me personally, not really heavy in the technical side of things. For me, it's more so on the financial side and the legal side. We follow the technical a little bit because it dictates how some of the things are taxed. So we need to understand how some of the airdrops or token grants or like how some of those items work in order for us to be able to appropriately pick up the taxes and reporting that's necessary.
What are the big differences there? Like, what level do you need to go to? In Germany, it would be like, oh, did you click on something to get it, or was it just given to you without you interacting? It's like the big discussion that is in Germany.
Those are some of the questions that we ask, and it's like, is it that it's in your wallet and you're able to just simply retrieve it or claim it at any point in time, or do you need to go out and actually mint it and in order for you to get it, are there limitations, or was it airdropped directly into your wallet? So like the going back to the Board Ape conversation of like, was the Ethereum airdrop directly into your wallet, or did you need to go and claim it, or like tokens and everything else, or like do you have to do something like play to earn, so on and so forth. So like there's a lot of different questions and things that are looked at in order to see how things are taxed.
Should that also factor into product design in crypto and Web3?
It could and it probably should. The thing is that a lot of people, a lot of technical people don't come to accountants to figure out how to design something. They'll usually first design it, code it, and then come to us and be like, hey, this is what we've done. How do we do the tax reporting?
Because from a product design and development standpoint, like when we talk about specifications and framing the development, we usually just go, okay, what's easiest for the end user from a user experience standpoint, like usability? What is the fastest, most simplest way to get something done? And then we add some complexity technically, at least in the scope that is possible, to make it easier. And I think we should also add more of the tax concerns, because like we think about, well, we can just send it to the user because that is easier for the user, but we don't think, oh, if we send it to the user, what are the tax implications on the user, especially if it is a token product where you can then trade the token and it basically becomes a financial value attached as well.
Yeah. Currently, we're working with a number of companies who are getting ready for token launches. And a lot of them that are working with lawyers have, because of the attorneys, have come to us beforehand
Yeah.
to make sure that everybody, legal, tax, accounting, are all on the same page before token generation, before token launch. Employees and contractors are taken care of correctly, making sure that if there were investors, that the investors are taken care of correctly. And then any of the people who are buying or using the tokens in the future, so that there's no surprises there as well. So there's quite a few companies that we work with that are thinking about it beforehand and appropriately. But we also have a number of clients where it's like, okay, this has already been done. The tokens are launched. there's a price to them. Let's figure out what we can do to minimize taxes. But there will be taxes due. XYZ needs to be paid. Like you can't get around this, or that because it's already on the chain. There's a record of it. We need to do this to clean things up, and so on and so forth.
So what would be the ideal crypto development and crypto thinking process for you as an accountant and tax person?
If possible, 3 to 6 months before launching something new, you have that conversation with the accountant, the lawyers, the tax people. Make sure that everybody's on the same page. Make sure everybody's in agreement, and then go ahead and actually do the development work. Because it ends up saving a lot of time and money at the end of the day if it's done correctly the first time.
So that is, I want to develop something, I then go instantly and ask about it, about how I want to develop it, and have it be in the design stage, and then I go out and develop it. Or is it like, if I want to launch in 6 months and I already have developed a solution, then?
What works the best for what we've seen is like, hey, we have this idea and we're going to raise money for it, like VC backed ideas. The way we see it best is, hey, this is the idea. This is the deck. We go out and we have conversations with investors. Before you get that term sheet, talk to an accountant.
Okay. And if it's a larger corporation where it's like, oh, we're already incorporated, we just want to go into crypto, what would the development flow look like there?
Have a conversation with, so basically figure out the technical ideas, talk to an accountant, lawyers, about how to best implement it or structure it, and then go out and actually do it. Because something as simple as having directors that are in, let's say, Switzerland versus the US
Yep.
makes a lot of differences and simplifies a lot of things. Then, like, somebody's like, well, we're a US company, we have everybody in the US. It's like, you might want to get people who are in Switzerland, pay them X amount of money, and it simplifies the legal side and the accounting side and the US reporting side of things. And it's completely legitimate. Like, there's a big difference between tax planning and tax strategy and tax avoidance. Tax
Yep.
planning and strategy is completely legitimate, it's completely legal, it's encouraged. Tax avoidance is what you never want to do.
Yeah, tax avoidance is the illegal going around taxes that you should be paying and are legally obliged to pay. Well, to me, tax planning is the sensible way of structuring it so that it is actually not a burden and just something you contribute to society.
Exactly.
It's like that's also a fun thing with friends of mine where I'm like, oh, I can plan, for example, business trips in a way that it actually makes sense, and then add 1 or 2 days, or if I need to be somewhere personally, I can add 1 or 2 days of business meetings because I'm going to be in that city anyways. So that travel day and travel cost then helps me in terms of lowering the total profit for the year, which is interesting. And people that don't understand it, who are like full-time employees and basically just don't even have a lot to do with the taxes, they're like, well, aren't you doing tax avoidance in that sense? And I'm like, that is planned.
Exactly. A similar thing as like, do I want to sell this token or these shares December 31st or January 1st? That's not tax avoidance. That's like, hey, I'll delay this transaction by 48 hours and I will
Yeah.
either defer my taxes or potentially eliminate my taxes because of the difference in a day or two.
And that could be the difference between being liquid enough to actually pay and survive another year or just going bust instantly because of some tax bill.
Yeah, exactly.
How's it in the US when it's like, oh, 31st of January and the IRS and the tax office be like, that is 31st of January. You knew exactly what you're doing here. do they have a closer eye on that, or is it like it's still that year?
Um, they look at if it was like a cash deposit or a check deposit in like the first January or second January, because then it's like, well, was this check really received in November or December and you just didn't deposit it until January? But if it's especially something that is transacted through a third party, so like a wire, an ACH, like an electronic transfer or an electronic transaction, those are very simple to prove that, like, hey, this was initiated January 2nd, so this has nothing to do
Yep.
with the prior year. It's 100% related to this year. Um, and there's not, like, the IRS is not really going to question or have an issue with that.
That's interesting. In Germany, when you do get audits, they're all manual. So sometimes you want to be more careful in terms of the actual date. So if you already know that you can defer it, you just know that you will defer it, and then it's fine, and you can like do the sale in like mid of January, end of January. While in if you want to keep it in this year, then you would sometimes be inclined to just go beginning of December or mid of December, so that it is especially clear just from the timing that it is not necessarily just a tax play, to keep avoiding the auditor to really look deep into your logs, to just have an easy audit. And that's like some things people told me about, where it's like, can you rewrite an invoice for last year? And I'm like, I'm not sending that out 1st of January, mate.
Yeah, I mean, there's plenty of people who do tax loss harvesting at the very end of trading for the year. So there's plenty of things that people do specifically for taxes, tax loss harvesting, and some other transactions, which are completely legitimate. There's no real issues on that front. And when the IRS sees it, it's going through a third party in the sense of like a bank or a brokerage, and the transaction happened when the transaction happened.
How is that in crypto? Because you technically have a third party sometimes, but sometimes you don't. Like the smart contract and blockchain are your third party.
There's a timestamp from the blockchain, so we use the timestamp that's on the
Okay.
blockchain, and then just basically go from there. Our usual recommendation is to avoid the issue, concern, or complication of time zones, to not wait until the 31st to sell, call it by the 29th or the
Oh
30th.
yeah, because time zone in US is different than UTC, where most of the blockchain stuff is UTC.
Correct.
So
Correct.
you could already be 1st of January in terms of blockchain timestamp.
UTC. Yeah.
Time zone
So
is
in order
really interesting.
to avoid that entire issue, we just tell people to like sell by the 29th, and then
Yeah,
yeah.
from a technical standpoint, time zone is a debacle, like a straight up debacle, because most of the logging and all of the server stuff usually is calibrated to UTC, for the simple reason that then you only have one time zone, and then your reporting front end is supposed to import it back to your local time zone, if you do it the easy technical way. Otherwise, every time you timestamp something, you, especially if you're working with international entities, you have to, you can't sync the server state. So that's why the blockchain is UTC. Also, especially like logging in the cloud, we had SLA reports where we just built a tool for doing reporting on uptime, and the tool was in UTC, but you entered the customer time zone as well, so that the report it spit out was in that time zone, because the reporting itself and the SLA is only relevant in their customer's time zone, because you don't care if it's 12 a.m. UTC, but you care that 12 a.m. UTC means 8 a.m. Whatever time you're in, or late evening Pacific time, because your customer is Pacific Standard Time, right? So
Exactly.
that's also interesting, because the working around that, especially if you then have to factor in holidays. Please calculate Easter for me.
Yeah.
Oh, it is depending on the moon phase. Or now go tell your computer that you know the moon phase. Like a analog watch with the moon phase and annual calendar is probably a better tool to calculate Christmas than your computer. if you don't input the algorithm into the computer. Like there are some algorithms nowadays where it's rather easy, but it's still like
Yeah.
we had somebody ask, yeah, so Easter is the 31st of March, and I'm like, no, Easter is whatever offset there is, and all the other Easter related holidays are offsets of Easter. So we have to take the programming function Easter, and you just give us Easter as text, please. We handle all the other stuff. Is there some other fun stuff where you're like those kind of complications in crypto because of the way how it technically works are interesting?
I think the other one that is when crypto goes from one chain to another and there's bridging.
Mhm.
Not all blockchains are supported by all softwares, so it complicates the accounting. And it's also sometimes difficult to explain to people where it's like, this is ETH on this chain, and then this is ETH on a different chain, but they're two different things, and you can't look at it as the same thing. And they're like, but you told me it's ETH. And yes, but it's so like if people aren't really deep in the crypto world, it becomes difficult to explain it to them. Where it's like, well, no, in this case, just think of it as one thing, but in this case, it's two completely different items, and don't mix the two up. And when you tell people that, they're like, but you tell me here it's the exact same, here it's two different things. It doesn't make sense. And it's like, well, you need to look at it this way. And it just confuses a lot of people.
Are there also taxable gains, like we talked about earlier, when you bridge? Because you go from Ethereum mainnet ETH to, say, a layer 2 ETH?
It depends. So like sometimes there is, sometimes there isn't, because it depends on like ETH and wrapped ETH was always a question of, is it a taxable event?
Yeah.
Staked ETH or not staked ETH, so the conversion from ETH1 to ETH2. So like once again, the answer is, well, it depends on which one you're looking at and what the purposes of it are. Similar as to like USDC on one thing versus another, and like so on and so forth. So like a lot of it really, I hate to say this, but it depends on which particular transaction you're looking at.
If we were to go into this a little further, I would just have a counter up top saying like it depends, and we can take notes on that. It would be a fun drinking game. Just ask your accountant different questions, and every time he says it depends, you get to drink one. Well, you have a funny evening if you do that, I think.
Too many people will have liver issues.
No, but it is really fun going from one blockchain to the other because the user experience in 2024 is still shit, and the accounting, it seems, is even worse.
The accounting is difficult.
So if you just zoom out of the accounting and you look at the whole crypto and Web3 space, what do you think is the core problem that it addresses?
I think crypto is able to resolve a lot of the complications that the banking world has. One is wires or ACH payments take a very long time. You're limited to the hours that you're able to do banking. Countries takes a very long time. And if you look outside of the US or Europe, if you start to look at Latin America and Africa, transferring money from the US or Europe to, let's say, Africa, end up costing a lot of money.
And potentially also fraud allegations.
Fraud, safety, a lot of different things. So if you have the blockchain and you're able to transfer money for just gas, it ends up being a lot quicker and a lot cheaper. The other thing is if you have the blockchain and it's used for government reporting, nonprofit work, whatever, somebody who's interested in seeing why am I paying my taxes?
Jacob.
The very first question that we had at the very beginning, they can directly see, okay, I paid $100 in taxes. 2% of that went to the schools, 5% went for roads, XYZ. And they can directly see, okay, fine. I paid a lot in taxes, but at least I know where it's going.
Yeah, and the added transparency in that is also if you build a dashboard on top of that data, as long as you trust the dashboard to actually pull from a good data source, you can have like 3 different dashboards where one is from the government officially, but then you have the people who are like, oh, I don't trust the government. Well, just look at the non-government one that you also developed that shows the same number, maybe like rounded up or down because you want to screw the government and be like a little off on your number, but it's the same and it's real time because everything that happens there is there. Like I remember Dan Romero from like the Farcaster Bobcast team on his podcast being like, I wonder why nobody has built a dashboard showing Coinbase volume. And there is a dashboard out with Coinbase volume, so you can infer from people going into Coinbase and out of Coinbase how much trading volume there is, figure out the historical multiplier to the trading that is just done on Coinbase internally, where they don't have to actually interface with the chain, just their own internal accounting. And then you can figure out how many fees they will earn. So you know their quarterly earnings before they even do.
Correct. I have heard that from people saying that, like, hey, you can basically know what the Coinbase earnings might be within a tolerance of error, down to the minute. And I'm like, yeah, I suspect somebody could trade their stock based on that. So
Yep.
there's a lot of things that could be done with information if it's transposed or made transparent and available to people. And it's funny enough, it basically is potentially able to answer the very first question that we got of why am I
Yep.
paying my taxes or where is it going? And it's, hey, this is the exact use case that we can use with it.
Do you think that there's anything else out of the financial space? Where do you think that is really, really interesting?
Um, I think the other big items that it could be used for is um, storing records and data. Like if somebody's um, birth certificate is stored on the blockchain, if there's a hurricane or a fire, it's not a risk or an issue. Like you don't need to have a safe or vault of your own. It's always available and accessible on the blockchain. Um, and the same thing could be done with like other government interactions or things, services that you're getting, where it's like, hey, my passport's here. I can just walk right through um, the border and it instantly records that I'm able to come in with my visa and whatever. And I
Yeah,
don't need to spend 3 hours in line for somebody to review my passport and stamp it.
because I just have, say, my digital whatever with me, um, that we somehow tied and made it biometric, face scanning, whatever you want to do. I will not comment on the technical implementation because that also has political views attached to it. Some people like the face scanning, some people don't, and whatever. Also, technically, it's what do you do? How is there? If you die, nobody can use your eye anymore. So how does inheritance work? There are many different technical questions going to that, but I think that is really interesting because you could technically do automation on steroids by using public blockchains. If you then go into private permissioned blockchains, where the private and permission basically means there's a predetermined set and only that set of companies, people, entities, whatever, are allowed to run computers on that network or even use it, then it might not be public. It is public, so that's really interesting. What do you think about those trade-offs?
This is where the technical side of things, just like people who work on that technical side of things, just they know a million times better than I do, and it's at this point in time a little over my head.
So you think, well, just in general, if you think, okay, well, if we have a blockchain and anyone can join it, can run security on it, a computer that is part of it, um, or there's just a consortium of, say, like Apple, Google, Microsoft would be like, oh, we're running our own business blockchain now because we are at Google to it. We are the big like 3 or 4, Facebook, Meta,
Hmm.
and all of IT, or like 80% of it, is running through us anyways. Um, so we'll have a network where only we can join, but as customers of us four, you now get the benefits that everyone discusses with blockchain. So like that's kind of where I'm going.
There it becomes, I think, partially a question of like, what's the pros and cons of it being fully public or private or a
Yeah.
mixture of the two. I think this leads to partially the question of that a lot of people are having now with like AI and making sure that there's guide rails around AI for public use or appropriate use of AI so that it's not creating too much inappropriate information or wrong information and fakes and whatnot. So like a lot of we're so early on in crypto blockchains as well as AI and all of this
Yeah.
where the technology is running so far ahead of the conversations. And that's just basically, I think, where we're at.
Yeah, I think that's really interesting point, because with the some people and some information like medical stuff, you right now, if you want to build it on blockchain, you have to have it private, um, and build permission systems. Well, if we get more technology and cryptography that allows us to build public systems that way, um, people like Cassie on Farcaster will probably be able to tell you how that system would work and play out, to have it be like, oh, your medical data can go on a public network while not being exposed, which is something that many people will never understand in terms of the possibility. Um, and that is possible through cryptography, and it's not efficient right now, but we'll hopefully get there. While other stuff, you're like, if we have a consortium of the big banks running a blockchain network, how can I verify that it's actually like what I'm seeing? Or if the government ran the blockchain and I couldn't join it, how can I verify that the tax spending is actually what they do? So like I also think it depends on the level of transparency you need and are required to have from the people you serve.
Yeah. Yeah, I think there's still quite a few things that need to be looked into and figured out.
If if you look at the Web3 blockchain, especially in the context of what you do and advising startups, people, and businesses, what would you say are the guidelines to look at and your favorite resources if people are like, oh, I need to read into this?
Um, from a task perspective or from a technical perspective?
Well,
Technical, I have absolutely like that's way above my pay grade.
I mean, well, technical is like just listen to this podcast and you'll get it broken down. Um, if you want to listen to the tech stuff, like where do you look?
Um, so uh, this goes back to what I had mentioned earlier. A lot of this, there are no um, tax cases or extensive legislation that's been published. The IRS has been slowly publishing um, some opinions or guidance and FAQs, which the IRS has on their website, but it's not super extensive, and there are limitations as to like what's available out there.
So it's basically still, well, figure out what would be the equivalent outside of it and just hardcore dive in. Seems like the technical is still the same. Like there are some resources like Ethereum.org is doing a good job of figuring out Ethereum, but they're not doing a good job of explaining the, oh, I'm a 5-year old, what is blockchain? Where you could go, oh, this is Lego bricks, but they're actually glued together. So as soon as you did something with that brick and you put your figure on top of it, you can't do anything else. Well, that explanation isn't on Ethereum.org, but you can find the Ethereum stuff and read into the technical there and then dive deep and know where to look from there. Um, so it still feels the same in the law and tax context.
Yeah, it's still very early on. And a lot of it, you have to say, well, this looks like this. So based on, I feel comfortable to do this because of X, Y, Z. But there's still not 100% answer that this is the correct answer.
Yeah. Also, technically, like I can reassure you that we're also just figuring out, especially also in Web 2. Like there people will tell you, oh, there is a perfect way to build a mobile app. Well, there is a standard way, but depending on what you want to do, there's also no good resource. Just to close off, what would you think is the biggest opportunity in Web3 today?
I think Web3's biggest opportunity is taking industries that haven't been disrupted for years or decades and skip the implementation of Web 2 and just go straight to Web 3 and really changing the way things have been done within that industry to get it into a very Web3 world.
What are the questions you would ask to examine that and think of those industries?
I mean, it's a question of how many people use it, how frequently do people use this, and how much of an improvement would this be?
And then figure out a way to deliver the improvement on the result.
Yeah.
And think about, well, how do I actually do that? How do I do that even faster, whatever? Would you care about the legal and tax implications? Because like some solutions you could build, but they're legally limited, or you have to like spend a lot on legal and tax planning and so on to figure it out.
I think the legal is very important to get mass adoption. I think the biggest thing that a lot of people are discussing right now is how do we onboard more people into Web3?
Yep.
And I think if we don't look at the legal side of things, the persona, the perception that crypto is used by drug dealers, money traffickers, money launderers has to be broken. And I think in order to break that perception, the investment on the legal and appropriate regulatory things need to be done. And I think this is where Coinbase and Brian Armstrong have been very methodical about it, where every step that they've done has been very transparent and very legal forward, where they will think about things and they'll go to the government, and they've made all of this very public, where it's like, hey, what do you want us to do and how do we do this appropriately before they actually go and do it. I hate to say it, but they're basically the only ones left
Without a class action.
Because they've wanted to the entire time make sure that they're legally buttoned up and doing things where the government isn't going to get pissed off, because the quickest way to get shut down is to piss off the government.
So you think it's not a tech push? It's like, oh, if you have a tech push and you have the technical, just go around and figure it out before you go public. So
if you're looking to do something on a technical thing and it's a scale of like 10 or 20 people, then you can like play around with it, see what's going on and whatnot. But once you get to 1,000, 10,000, 50,000, or 100,000 people, at that level, you're interacting and potentially moving a lot of money.
Yep.
And at that point, if you piss somebody off in the government incorrectly, you can have a lot of problems. And even if your idea is the best idea in the world and it can solve all of life's problems, if you did not do the appropriate steps and you didn't take the appropriate legal steps, you're just not going to be in existence to save the world.
And then a competitor who did the long way will just copy that and do it legally.
If the government doesn't even just flat out make what you were trying to do illegal to do.
Well, that would turn out of cash, basically. Yeah. That's one example of the tech push, where it's like we have totally private transactions where we're just mixing it, like throwing cash into a pool and we know how much cash you threw in, and you just take out somebody else's cash. It's like the Tornado Cash 101.
Yeah.
And the government was like, you need to prove where your money comes from. Don't do this.
Exactly. Exactly. And there's other examples other than Tornado Cash, where things like this were being done, and it was just like, well, no, what you're doing is transmitting money. In order to do that, you need a license, and so on and so forth.
That's awesome. Thank you so much, Alex. Where's like the best place to reach you, to read up and follow up with you if people are interested, especially in tax, legal, and your thoughts in general?
LinkedIn, they can always find me, as well as the Farcaster community can always find me on there as well.
Awesome. Your links will be down in the show notes. So anyone listening, just click the more details and you'll see it. Anyone viewing on YouTube, it's right below. So
Awesome.
that's really awesome. Thank you so much for coming on, Alex.
Thank you for having me. Have a good one.
You too.
Bye.
Thank you for listening, and thanks for the guests for coming on to Tech Suite for the C-Suite. In the description below, or the show notes, whatever you want to call them, you will find the awesome resources our guests mentioned to get you started. You can find links to our guests, and you all can also find a summary, takeaways, and other links to keep connected with the show. Thank you so much for listening. Have an awesome day.